Hello everyone. So in this video we are going to learn about one of the financial statements, that is balance sheet. So a company's balance sheet shows its financial situations at a given point in time. It is quite simply a formal presentation of accounting equation. As you would expect, the three sections of balance sheets are assets, liabilities and owner's equity. So what is balance sheet? So, in simple terms, balance sheet is one financial statement which represents financial position of a company at a given point of time. मतलब at a certain point of time. Okay. So, for example, every financial statements may be usually prepared for annual. It can be prepared for a quarterly, but for audit purposes or for declaring the results or declaring the dividends, we prepare financial statements at the end of the financial year. That is, balance sheet, particularly balance sheet is prepared as on date. मतलब as if you are following financial calendar, that is financial calendar starts from 1st April to 31st March, and normal calendar year starts from 1st January to December 31st. Okay, if you are following calendar year, your balance sheet is prepared as on 31st December 2024 or 25 something. Okay, and if you are following financial year, then your balance sheet is prepared as on date, that is as on 31st March 2024. Okay, so balance sheet consists of three sections. In earlier class we have seen about accounting equation, that is assets is equal to liabilities plus owner's equity. So that is the case with balance sheet. Okay, balance sheet is prepared on the basis of that equation. So balance sheet consists of assets, liabilities and owner's equity. You know what is the meaning of like assets, liabilities and owner's equity. Okay, if you want you can check my previous video also. So in short, asset is the one which company owns, and the liability is the one which company owes to others, and owner's equity is the one which remains after paying off all the debts to the outsiders. Okay, so we will see one basic example or basic look of balance sheet here. Okay, first comes assets. Under assets, what are the, like under main asset section, what are the assets which balance sheet consists of? For example, it consists of cash and cash equivalents. So cash is the one which company owns. The cash is the one which the company owns. Cash equivalents are the short term marketable instruments, okay, other than the cash, which is equal to cash. Okay, so which we can be convert it into, like it is into a liquid situation which we can convert like easily into a cash. Okay, and inventory is also a part of assets. Inventory means like finished goods, work in progress, etc. Okay, and accounts receivable, the money which is yet to come from the customers is accounts receivable. Okay, because in future we are going to receive that amount, so it is also a part of assets. Property, plant and equipment, all the buildings, machineries, etc., equipments, etc., forms part of the assets, because these are the thing which company owns. Okay, and we will make total of all these: cash, inventory, accounts receivable and property, plant and equipment. This total should be equal to liabilities plus owner's equity. Now come to liabilities. Liability side, we have accounts payable, means we are going to pay to our suppliers or creditors. Okay, accounts payable is the which is the amount which company owes to pay others. Okay, so it is a liability. Notes payable also a liability. So we have total liabilities over here. And in owner's equity we have like it comes common stock like share capital, equity share capital, preference share capital. Okay, other retained earnings, the profit which we earn, net profit, reserves and surplus, securities premium, all these comes under owner's equity. So we have common stock and retained earnings. The total is 1,90,000. Total liabilities plus total owner's equity is equal to 4,80,000, which is equal to total assets. So here accounting equation is applied. So total assets is equal to total liabilities plus total owner's equity. Okay, here we have given the meaning of all these assets: cash and cash equivalents, balances in checking and savings account, as well as in any investment that will mature within 3 months or less. Whatever the balance we have in a current account or savings account in our bank is cash, and our other investments which will mature in 3 months or less than 3 months is called as cash and cash equivalents. Okay, if we come to inventory, goods kept in stock available for sale is inventory. Accounts receivable, amounts due from customers for goods or services that have already been delivered. The company has delivered all the goods and services, but cash has not yet been received from the customers. So it is called as accounts receivable or debtors, debt. Okay, property, plant and equipment, assets that cannot readily be convertible into cash, things such as computers, manufacturing equipment, vehicles, furnitures, etc., is property, plant and equipment. Now coming to liabilities, accounts payable, amounts due to suppliers for goods or services that have already been received. The company has received the goods or services which the company required, but company has not yet paid the cash to the suppliers. In that case, that is known as accounts payable. The company is yet to pay the amount. Okay, notes payable, contractual obligations due to lenders such as bank loans. Okay, it includes a contractual obligation on the company to return the money. Now coming to owner's equity, common stock, amounts invested by the owners of the company, retained earnings, the sum of all net income over the life of the business that has not been distributed to the owners in the form of dividend. Okay, all the profits earned by the company which has not yet been distributed to the owners in the form of dividend. If this okay, so we will cover about retained earnings in coming videos. Okay, in that video we will get a clear picture about retained earnings. Don't worry about it. Okay, now coming to current versus long term. Often the assets and liabilities on a balance sheet will be broken down into two parts. One is current asset or current liabilities, and another one is non-current assets or non-current liabilities, that is long-term assets or long-term liabilities. Current assets are those that are expected to be converted into cash within 12 months or less. Okay, current assets are those through which we are going to receive the money within 12 months or less than 12 months is known as current assets. It is readily convertible into cash. Okay, typical current assets include accounts receivable, cash and inventory. Accounts receivable, almost we will be having uh, like due date till max to max 90 days of due date we will have. Actually in real scenario it is 30 days, but till 90 days we will wait. After 90 days it will be converted into non-performing asset or bad debt. Okay, it will be converted into bad debt, means the customer is not going to return the money. Okay, so accounts receivable is actually a current asset because we will receive those money within 12 months in any ways or in any case. Okay, cash is also current assets and inventory is also a current assets. It is it is readily convertible into less than 12 months. Okay, everything that is not a current asset is by default a long-term asset or non-current assets. Sometimes long-term assets are referred to as non-current assets. As I said, property, plant and equipment is a long-term asset account because we are going to use property, plant and equipment over the period for long-term use. Okay, if we are not going to use the property, plant and equipment for like 1 month or 2 months, we are going to use building or office building for long term continuous use. Okay, we are not going to use ki baba, say we are using building A for 1 month, building B for 2 months. No, not like that. So property, plant and equipments are used for long term benefits, so those are called as non current assets. Similarly with the current liabilities, which current liabilities are those that will be need to be paid off within 12 months or less, and the most common example of current liabilities accounts payable. Notes payable that are paid off over a period of time are split up in the balance sheet so that the next 12 months payment are known as current liabilities, while the remainder of the note is also is shown as a long term liability. Okay, in notes payable what happens is that if we have suppose mm 2 lakhs of notes payable or bank loans, okay, in that 2 lakh in coming next 12 months we are going to repay 50,000 rupees, then that 50,000 rupees is considered as current liabilities, and remaining 1 lakh 50,000 which we are going to return after 12 months, those are considered as non current liabilities. Okay, those are splitted into current and non current liabilities. If accounts payable, if we are going to pay off the amount within 12 months, then that is called as current liabilities. Otherwise, it will also be called as non-current liabilities. Okay, and multiple period balance sheets. So, what you will often see when looking at published financial statements is a balance sheet such as one of the following page that has two columns. One column shows the balance as of the end of the most recent accounting period, and the adjoining column shows the balance as of the prior period. Okay, so here what we are going to understand is that every company prepares a balance sheet and it shows current period amount or current period balances also and previous year balances also. In this example, if you are seeing balance sheet is prepared but there is two columns for the amounts, one is 2000, for example 2010, and another one is for 2011. So it is the rule of accounting that you need to present balance sheet with the 2 years. Okay, one is previous year and the another one is current year. So by like presenting balance sheet in this format, you will be able to compare the balance sheet from earlier year to current year. Okay, you can do a trend analysis basically. Okay, this is known as multiple period balance sheets for. Okay, and this is it for today's class. In today's class you got to learn about like how to apply accounting equations to your while preparing balance sheets, what are the current assets, what are current liabilities, what are non-current assets or non-current liabilities, and what is the format of balance sheet actually. You got to know about it. This one is the basic format of balance sheet. In coming videos we will see balance sheet as per US GAAP, or if you are following Indian accounting standards then as per Ind AS, how the financial statements will look. That advanced part will cover in later part of the videos, like in coming videos we will cover that. Okay, okay, cool. So this is it for today. If you have any questions, please post those questions in the comment section below and I will try to answer your questions. And till then, please like my video, share my videos and subscribe to my channels, and please stay tuned for the next video. Okay, bye bye.